I think we're good. Testing. 1, 2. Are we ready? Let's roll. So in 2021-2022, any founder who's in the fintech industry could enter an investor's cabin and raise money very easily. Why? Because he convinced the VCs that fintech is the next billion-dollar industry. I'm making an app to round up stuff. I'm making an app to invest in gold. I'm making an app to invest abroad. I'm making anything in finance that is going to disrupt HDFC Bank, and I'm going to become the next big thing. But did you know that 99% of these startups have failed? Now, why are these startups failing? Was it because they were chasing revenue over profitability? Was it the investors' expectations? Or was it regulatory changes? But there's actually one sector that is still winning in the market, where investors are still investing in this company and the founders are also making a lot of money. Now, what is this sector? What is the trend of this sector? And is this sector going to be the next biggest sector of the Indian financial ecosystem? Today, I've actually found a beautiful report that talks about the Indian fintech industry, which is created by Inc42 by an amazing analyst called Sandeep Singh. And this report has all the trends of the Indian fintech industry. What went wrong? What went right? What is that winning sector? And also, there is a secret hidden sector that is going to become the next biggest sector that we're going to look at in today's report. Welcome to Breakdown. So guys, the first slide that we're going to look at today is the rise of India's digital economy. Right? So what has changed in the last few years, which has led to the growth of the Indian fintech ecosystem? Now, as you can see the graph here, we've seen that the internet users in India have gone up from approximately 749 million in 2020 to now approximately 1 billion users. Now, this is a massive stat because the more people that come on the internet, right, the more transactions happen very smoothly. Now, there are also a couple of key indicators here which has also helped this ecosystem grow, and that is the reduction in data cost. Now, I know you guys know that when Jio came into the system, right, they completely commoditized the entire GB MB market, where now the internet data usage is very cheap and very low, which has given access to even tier 2 and tier 3 Bharat to actually come and transact in the fintech ecosystem. Now, another very important stat that this report has shown is the number of smartphone users in India has gone up to 600 million. Why is that important? Because at one point in India, we were not using smartphones and most of the people were using Nokias and handheld devices, right? Now, because smartphones became cheaper, we had a lot of Chinese players coming into the market as well. Everyone can now afford a digital phone, and with the digital phone with low data cost can also now start transacting very easily. Now, another very important stat here as well is the UPI entering the market. Now, when UPI came in, not everyone was used to UPI, but because of demonetization, UPI completely shot up and everyone started becoming used to UPI. Now, why is UPI so important? Because the ease of doing transactions became extremely easy. Now, I don't carry cash. I UPI everything, right? And it's not just UPI that works for retail merchants, but it's also UPI that works for any online transactions or even big transactions up to 1 lakh or even 2 lakhs now that has recently changed. So UPI was also one of the key driving factors for the adoption and growth of the fintech industry. Let's get into the main conversation, that is how big, Shashank, is this fintech industry? Now, the entire market size for the Indian fintech industry is approximately $2.1 trillion. Obviously, that's a lot of money. But in this $2.1 trillion market, how much money has the VCs pumped in from 2014 to 2023? So they basically have put in a total of $27 billion into the fintech ecosystem. Now, there are two stats that are very important here, which is the ratio between the active fintech startups versus funded startups. And you will see this ratio is very off, because the total number of active fintech startups is 4,200 and the number of funded startups are only 655. But wait, does this mean that only 655 startups got funded, succeeded, and the remaining guys failed? No. Don't forget, there are people like Zerodha who have not taken funding and still done really well, right? Now, apart from this, let's look at the mega status of what a startup receives, which is called a unicorn status. Now, what is a unicorn status? Unicorn basically means a company that is valued more than $1 billion. And then we have another stat called Soonicorns. Soonicorns basically mean that they're very close to 1 billion, and if they raise another round, they'll easily reach $1 billion. Now, I know you guys want to understand and look at who the fintech players are who are in this unicorn category and who are in this Soonicorn category, and where are they mostly from. This slide has a very interesting take on that. There are approximately 22 unicorns in the fintech industry with a combined valuation of $68 billion. And the top hub for all these startups or all these unicorns are Bangalore. Now, if you want to see what these companies are, there are very interesting companies like Acko Insurance, Bharat Pay, which was Ashneer Grover's company, BillDesk, CoinDCS, CoinSwitch Kuber, because these were in the crypto industry at that point, Cred, which was enabling the payment system, and a lot more. So now if you want to know a little bit more about the Soonicorns, let us look at that data as well. Now, as you can see, there are companies, very interesting companies like Lending Cart, Bank Bazaar, Cash Free, Credit Bee, Scriptbox, and a lot more are here, right? And again, the top hub here is Bangalore. From what this report basically tells me is that most of the fintech boom or the fintech companies that have come out who have become unicorns and Soonicorns are actually coming out of Bangalore. And that means Bangalore is actually supporting the fintech ecosystem. But again, let's look at more data to understand our hypothesis. Now, remember at the start of the video, I told you that there's one sector that is doing really well, which is winning everything in the market right now. Now, I want you guys to guess which sector that is, and I'm going to show you 6 options, okay? The first option is banking. The second option is fintech SaaS. SaaS basically means software as a service. Now, the third thing is called insurtech, which is also known as insurance tech. The fourth one is investment tech, because these are companies like Grow, Zerodha, Smallcase, Scriptbox, which basically enable common users like me to invest our money somewhere or the other. Now, the fifth sector is lending tech. Now, this sector basically has startups that enable users like me to actually take money from other startups, basically like a loan, right? So they enable me to take a loan, get access to funds. And finally, the sixth sector is called payments. Now, these are payment providers or payment facilitators that enable businesses or individuals like me to collect money from someone or the other. What is your guess? Which sector do you think has done really well? Let me know soon, because in the next slide, I'm actually going to show you what the winning sector is. How many of you all guessed lending tech? Because lending tech is that one sector that is doing extremely well right now. Why? Because both the upper class, the new middle class that has entered, and even at some point the lower middle class has also tapped into the lending ecosystem of India. And now everyone is getting into an EMI culture or a debt culture where they're building assets and building liabilities at the same time using debt. Now, as you can see, the overall fintech market is 584 billion, and lending tech alone is taking 60% market share. That means if you're in the fintech space, then it'll pay you well to be in the lending tech industry, and you have a higher chance of succeeding because most of the money is flowing into the lending tech arena. Now, number 2 and number 3 with 14% and 12% market share are insurance and payments. That means these are companies that are providing you either health insurance or life insurance or general insurance or car insurance, and there are other companies which are payment providers like Bharat Pay, Razorpay, and all of those companies. Now, these guys take up together almost 26%. So that means 60% is gone from lending, another 26% has gone from insurance and payments. So what's left? So if you're in the fintech industry and you're not in these 3 top sectors, then your chances of winning is automatically reduced. The next sector that we will look at, which was one sector that got a lot of money in 2021-2022, it was also touted as the next big sector in India, and people thought that this sector is going to disrupt banks completely because banks are slow, their technology was bad, and this was the neo-banking industries. And we saw a lot of startups coming into the neo-banking space, but few of them succeeded because their main goal was that big banks are not upgrading technology, and they are upgrading their technology and making it easy for the users to use their apps. But guess what? Most of the big banks upgraded their technology, hired the best people, and made simple UI UX or simple user flow for people like me and you. So the entire need of this industry got completely cancelled, and let's look at some of the startups that have actually got cancelled as well. Now, there were very famous companies like FamPay, which was trying to create a community to get payments, right? And also to actually use coins to facilitate transactions and vouchers. There was another company called FiMoney, which had actually tied up with Federal Bank. Then there was another company called Jupiter Money, okay, which was also doing really well. But now you will not hear a lot of information coming out from these companies, mainly because the entire concept of neobanking, right, and the entire idea of neobanking has now gone to a very sad state right now, because most of the banks have upgraded their app. In fact, there are some banks like SBI and even HDFC Bank have actually upgraded their apps, which is making it very easy for people like me to use their app, so I don't need to go to any other neobanking app to actually facilitate my transaction. So guys, in this slide, we're going to look at how the growth of the funding ecosystem has happened for the fintech industry and where the decline has happened. Remember in the start, I told you about the story where we saw a lot of funding happening in 2021, 2022. This slide shows the exact scene. Now, as you can see here, in 2014, 15, 16 and 17, there was barely any activity. And if you see the number of deals that were there were slowly growing only after 2017. Now, in 2017, notice this very clearly, there were approximately 140 deals, 2018 had 140 deals, 2019 had 132 and 2020 had 144. That means the last 4 years from 2017 to 2020 had a similar kind of growth in the number of deal counts that were there. But the funding volume was not great because the funding volume was anywhere between $2 to $3 billion. But then something happened. In 2021, we saw the deal count almost double to 300 deals. It went up to 282. And the funding valuation which went up from $2 billion to $8 billion. So what is the reason for this 4x jump in funding and 2x jump in the number of deals? Now, if you remember very correctly, after 2020, we saw COVID happening, and after COVID, we saw a massive bull run happening in India where all the fintech ecosystem players were doing really well. A lot of VC money was coming in 2021 and all the VC money was going where? Was going into fintech. Now, it's not that they invested only in lending tech, they invested across the ecosystem, and that is why you'll see the deal flow going up quite significantly. And wait, this continued to 2022 as well, right? Not at the same level, but it was definitely high with the entire funding value of $5 billion and 253 startups were invested at that point. But then, immediately after 2022, COVID also subsided and everything was completely fine. We saw the deal count crash to the previous levels, which was $2 billion, and only 65 deals happened in 2023. And these 65 deals also were only good deals because most of the money went to bigger companies like PhonePe. Now, if we go more deeper into this data and actually look at quarter-on-quarter analysis, you will also see that majority of the funding dipped because the check sizes actually went down. Now, what does this mean by check size? This means that if I'm investing in a company in 2022 or 2021, I used to give maybe $5 million, but now for the same type of company, I'm actually giving only $2.5 million or maybe $3 million. So basically, for the exact same style of company, earlier I was valuing it very high. Now I'm valuing it very low. So if the check size kept going down, the valuation goes down and the amount of money someone has to run their company also decreases significantly. Let's come to the most important sector, which is the lending tech sector. Now, if you see this, you will see that in Q2 2023, which was just one quarter, we saw 35 deals happening, and what? The amount of these deals was close to $838 million in just one quarter. That means this was almost close to $1 billion. But why? What was happening here? Let's understand a little bit more, right? Now, only in Q2 2023, the lending tech sector basically raised approximately $562 million, which is $500 million, and they had the highest deal count at 14 mega deals. Out of these 14 mega deals, DMI Finance got the largest funding round worth $400 million, which was approximately 80% of the total value that was invested in lending tech. Now, if you're going to start something in fintech, you might ask, Shashank, where should I go? Should I just migrate to Bangalore, start a fintech company there? Is my chances of winning higher? Let's look at some data. Now, only in Q2 2023, which we just spoke about, we saw that the maximum amount of deals happened in Bangalore at 13 and next was Delhi NCR at 10. But if you look at the value of money that was raised, then most of the money went to Delhi NCR. But again, the data skewed because of DMI Finance, and then $279 million went to Bangalore. So yes, if you look at the theory that we spoke about in the past, Bangalore still seems like the most ideal candidate to start a fintech company as of now. So till now, we looked at lending tech, which was the most favorable sector in the last 5 years. But is this sector going to continue to become the best sector in the next market? Or is there something new that is entering the fintech space where most of the finance companies will raise money? The next big sector in India is going to be cross-border payments. Now I know you're confused. Shashank, what is cross-border payments? What is this? Let me explain. This means you're getting a lot of money from outside India into India. Right? But this is normal. This is what Forex people used to do. But what is the benefit here? The benefit is that what do you do with this money once it comes to India? So guys, look at this very important stat. It basically said that in 2022, the inward remittance, which means the money that came from outside India, was close to $100 billion. And that means it's close to 3.1% of our entire GDP. Now, if you compare this with US and China, US is sitting at $6 billion and China is sitting at $50 billion. That means we're far ahead of US and China, and as you can see, most of the money is coming to India now and not going to other countries. Now, according to Inc.42's report, it also says that by 2030, the inward remittance market is going to be a $65 billion opportunity. Right now, remember, we had the same thing in 2021 where it was a very big market size. We have something very similar now with cross-border payments where $65 billion market opportunity is entering and a lot of startups will now come to take a piece of this pie. So let's look at how many startups have actually got funded in this ecosystem. So according to this report, approximately 20 startups have been funded right now, and out of that, 5 fintech unicorns are actually operating in cross-border payments. There are some famous companies like Razorpay that facilitates businesses to get money from abroad back into India. So that is a great payment gateway which we spoke about. Now, apart from that, we also have companies like Cashfree, BillDesk and Paytm, which again have an international payment gateway which facilitates foreign money coming into India. And then we have money transfer companies like Lulu Forex, bookmyforex.com and RemitGuru. Now, bookmyforex.com is actually a subsidiary of makemytrip.com. Very interesting stat, right? And finally, we have neo-banking companies, and we saw a very famous company called Neo Global, which facilitates a lot of Forex card transactions that were happening with zero Forex charges. So these are some of the massive companies that are currently operating in the inward remittance market. So if you actually look at the market, most of the companies are either money exchange startups or they're international payment gateway startups. That means there is still a lot of wide space for people to funnel the money from abroad to India and actually use that as an investment vehicle into our equity system. That nobody is doing till now. And that is a wide open space in the market where a lot of new startups will enter the space. So coming to the most important part of the report, out of the 16 startups that we saw that were unicorns, only 4 of them are actually profitable and making money. The remaining 12 companies or the 12 so-called unicorns are actually loss-making companies. Now, if you look at the profitable companies, they are Grow, which is very similar to Zerodha, right? And we have another company called Oxyzo. Now, Oxyzo is a lending tech startup that actually lends a lot of money to B2B companies, right? It is fintech lending, not to retail, but to businesses. Now, after that, we have 2 more companies, which is Razorpay. Now, Razorpay, we all know, is this amazing payment gateway that has everything involved, which is local payments, local remittances, international remittances, and also has payroll now. And finally, we have Zerodha, which is the poster boy of the financial ecosystem for profitability, which is also very, very, very profitable. So only 4 startups or 4 unicorns are profitable, and the rest 12 companies are in complete loss. So hopefully these companies turn out to be profitable soon, or else with the funding winter that is going on, with nobody getting a lot of money and the check size reducing, they might not survive very easily. Either they have to find a way to get money, or what is that one thing that a lot of companies do right now? Go IPO. So all of them might go IPO very soon, and I hope they go with realistic valuations and not unrealistic valuations. So today we've learned a lot. We've understood what the fintech industry is, how fast it's growing, what are the key drivers for the growth of the fintech industry, what are the famous sectors in the fintech industry, which is the best sector that is coming up in the next few years, and we've understood a lot more about the inward remittance scheme. We also looked at some companies that are profitable and some companies that are loss-making. And if you ask me, in my personal opinion, I feel lending tech is here to stay, Because if you look at the Indian ecosystem right now, we're moving into the Western culture, which is a more debt-driven culture or loan-driven culture. So I think in the next 10 years, lending tech will do really well. And I feel the global opportunity, which is untapped right now, which is the inward remittance, that is not being utilized completely. And I'm sure there will be a startup that comes in this inward remittance space and it will become a unicorn very soon, mark my words. So thank you everyone for watching this video. I hope you learned a lot from this video. And if you want me to break down any other industry, put it in the comment section below and we will do that. So until next time, this is me, Shashank Godappa, signing off. Take care. See you guys. Bye.